incredible price action for AMC on Friday. Let's go ahead and go over the potentials for the following sessions coming next week. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an AMC technicals, raw price action, and statistical thread of analysis on this happy Saturday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so we are looking at AMC on the 5-day chart here, referencing the ascending channel that we've been talking about for quite some time. And let's go ahead and just talk about a few details here. All right, so regarding the price action that we actually faced on Friday, let's go ahead and just open up the daily iteration here and take a look at the smaller broadening descending wedge that we're riding, right? So the smaller one within the larger one, the one that's actually prepping for that breakout. So if I mean, this is a great recovery, right? Huge buy volume. Let's go ahead and look at the after hours actually. So 490. Wow, it actually ended up closing at the same place. Okay, so what we're looking at here is the potential of a continuation to the downside. This is not a candle that usually gives me the idea that we're still gonna continue to the upside. This is not it's not healthy just yet. What I can say is that there are a few areas that we need to look out for. So I'm giving you the raw price action first before we validate with momentum later on, and we'll be going over these targets as we go. Another thing is, please don't fall for those text me and the WhatsApp comments, you know, in the comments below, saying for you know to reach out to me and the helpline, and guys, that's not me. Okay, don't fall for that. Anyway, it's just a lot of ARCa imposters out there. So anyway, here we go. So this is what I'm talking about. We have a gap here on the daily, right? So this gap doesn't actually have to be full. I mean, I'm sure everybody's seeing it too. It doesn't have to be filled, but it has a lot of rhyming with a few things here, and I'm going to talk to you why. Okay, so first of all, there is the potential to use the gap just as a support, right? So if we do use it as a support, a lot of times people tend to go long the stock just shy of the actual target itself, and you know that'll pressure a lot of people to miss the entry, and then they'll catch it and it continues to the upside, right? So that possibility could be in two places, between 433 and about 443. Okay, but like I said, I'm still kind of favoring the continuation to the downside, particular to maybe around 408. Okay, so let's go ahead and zoom out one more time and take a look at a couple things here, okay? Because this is where it starts to get a little interesting. If you follow my channel often, you'll notice that I talk about sometimes that we need to, you know, when making our trend lines, we need to sometimes avoid these huge wicks, right? So these crazy wicks sometimes are just psychologically driven, you know, FOMO and all that stuff. So we can kind of remove them from the equation. So let's go ahead and remove our strategy here, which is the ABCD, right? We'll get that out of the way, and we're gonna use now in reference these candles here, okay? As if you can see, actually, let me zoom in just a little bit. If you can see the pivot on these, it looks like it's a very similar pivot to what's facing here on the incline of the channel, right? So let's go ahead and just reference that. I'm gonna go ahead and adjust it after I show you why I'm trying to do it, okay? So take a look at this interesting touch right over here, okay? So I'm gonna take a trend line from here, right? And I'm gonna match it to these candles here, okay? Meaning that the channel is sort of off, right? So let's go ahead and just leave it like that temporarily. And now let's adjust the channel. Okay, so let's go ahead and pull it down just like this. And to meet the candles right on top over here, what I'm talking about, right? And also the ones down here. So let's continue. Let's meet them. There we go. Let's see. Probably about right there, right? Okay, so now we can actually make a quick adjustment to our lower end, right? Just so that it meets this candle down here. And now we can actually make the final adjustment here. Okay, which could actually be, that looks pretty okay. That looks pretty okay there, right? Okay, still a little, it could be a little tighter, right? We could actually pull back just a little bit just to make sure that we do have the lines in correlation alongside this area here. Okay, so now we can actually see that these candles are lining up. If we were to consider a continuation to the downside, just look at what it's looking like now. Okay, so it looks like we want to come back and test that support line from the the channel bottom, right? So now that gives this target a little more reason. Another thing is that why it's screaming a downside. I mean, this is absolutely just going to be another higher low. In retrospect, I mean, I'm talking about looking at it from this touch down here, right? So then we would make another touch, another, and another, right? Before validating this as for sure a good area of support before continuing on to the upside. So let's move on to the next chart now. Now that we have a reason why the sentiment may actually want to take the trade down to there. Okay, so we're gonna reference now the 5-day stochastic versus volatility profile. So volatility here represented by this indicator BBWP, and stochastic momentum is down here. So volatility is direction neutral. So right now we're continuing on an expansion phase while momentum is suggesting the continuation to the downside, rejecting from that area that we were talking about, right? Good stuff. So if we are to look at the daily price action here, there are a couple targets that I was already talking about. 442 may not actually be it. If we're talking about between 408, like we were talking about here, between about 408 to about, let's see, the 443 level, then there are absolutely targets to kind of keep in mind. Actually, the 4-spot 272 being at 419, meaning that the 408 would essentially just surpass this just a little bit, meaning that it would actually come down, reclaim the channel to test this newly converted resistance into support. Like I've mentioned before, we can fail it, right? And then we could actually come back up, right? So this is absolutely showing us that there is relevance here. So the 2-spot 272 could essentially be that 408 target before a continuation onto the upside. If we were to consider 419, then let's just go ahead and dive in a little deeper here. Apologies. So let's see where 419 could be. So 419 would essentially be right in the middle of this gap, right? The one from the daily. So here we go. So we can actually see it just like that. And also it would be the top side of this candle here. It would be the top side of this candle here. And more importantly, it would be the support of this gap here. See, look, 419, we can do it just like that. It looks like it was already trying to suggest that we would essentially come and close this smaller gap too, right? So here we go. We have several areas that are screaming within. I'm sorry, there's a lot of rhyming within this area here. Okay, so that's giving us those massive amounts of hints. So let's go ahead and continue on the analysis. This is we're gonna get to the overall targets that I actually see after referencing momentum, and this is going to be the divergence chart first. So divergence is the opposition of price action versus momentum. And in this case, momentum represented by this indicator RSI, Relative Strength Index. Okay, so you can see here that I've actually taken note of 1, 2, 3, 4 drives of both regular and hidden bearish divergence. And they're right over here for you to take a look at. Okay, so now that we know that we have these drives of bearish divergence and confirmed and in play, let's go ahead and continue on with the analysis. We're going to load up a multi-pane here, okay? I apologize if you hear my toddler yelling out there. He's just a little angry at mom. I don't know why. Okay, so let's go ahead and start off with the immediate short-term time frame, just like we always do. As you can see here, this is actually suggesting a little bit of consolidation, followed by maybe a potential upside, okay? But it's still within the bear weakness percentile here, the signal line. So remember that your signal line is the purple line, and your 14-day simple moving average is this pink line, okay? So now let's move on to the bi-hourly. Bi-hourly is still suggesting a little bit of consolidation as well. It looks like it's making a nice cross above this 14-day simple moving average. But since we are in the gravitational zone of the bear strength percentile, it's very likely for us to fail it and come back down temporarily. Okay, so the 6 hour and the 8 hour, or 6 hour and the 12 hour are both suggesting that there could be a loss of bear strength, but the hint coming from that 14-day simple on both of the time frames is still suggesting the downside. Another dangerous thing here is that the 6 hour is landing right in the gravitational zone of the bear strength percentile. Okay, so this is likely to face another continuation to the downside. Now, the daily time frame is in fact validating the downside for the next day or two. Okay, and this is absolutely approaching that gravitational zone of the bear weakness percentile, which would essentially have us continue to the downside. Hint from that 14-day simple starting to pivot towards that downside. Okay, and now let's reference the buy daily. Okay, so here's a further confirmation. The buy daily is now making a bearish cross below that 14-day simple. This doesn't mean that it's a reversal. It just means that we're pulling back, right? And this is in the 3-day time frame is essentially why I can tell you it's temporary. So this is why we're about to face the support from this 14-day simple moving average. Okay, so this is if we face the support here, then we can actually find a bounce. And it looks like the 5-day is already at that moving average, which would in essence actually bounce off of this and continue on to the upside, right? So let's go ahead and just go back to the price action and see what this is telling us. Since we are looking at a pretty deep downside, then there are a few possibilities here, okay? If we take a retracement, this is going to be immediate short term, 4 hour. Let's take a fib retracement from the previous candle before the after hours activity. So it's this one right over here. We're going to take it from the swing high, or sorry, from the wick low to the wick high, right? So swing low to the swing high, and in inverse manner so that we can get our fibs to appear to the downside, right? So right away, we can actually see several areas of confluence here. First of all, the 1 spot 618 at $4.47. The targets are already very similar to what we were looking at in a discretionary manner over here. Take a look at that, 443 and to about 408. We have about 419 where this gap is, right? So let's go back to the targets. So we have where it was 443 is suggesting 447. Why? Because it has absolute confluence with these candles here. Okay, so we have support here, resistance here, and actually this was a massive one for resistance as well. Okay, so good stuff there. Now, the lower end of that target, which would essentially take us to about 439, which is the top of this candle here. This is very likely to be another area, but I wouldn't see this as the primary targets. My eyes are actually, or I'm eyeballing for sure the area between, I'd say about 419 to 429, right? And it's in respects to the golden mean, 2 spot 618. Okay, so it's very important that we can see that. Here's another perspective for all of you. Okay, I want to just give you something that kind of shows us, it's a little reminiscent of what happens in this price action, right? So let's take a measurement tool, right? From the highest point of this right here, right, to the point to where it actually reached down here before it did this little bear flag, right? So we can actually see that point would be, let's just match it, right? So here we go. It's slightly off, whatever, but it's there. It's about a decline of about 15.42%. So let's go ahead and now apply this to this next area here, right? So let's go ahead and see, oh, sorry, from this one right over here, which is this, right? So let's just drop it a little more. And it's suggesting that 15% landed right at the bottom of where it started trying to bear flag again. So it created this pattern right here, right? And now the next thing, so we take it from now this candle here, right? So let's go ahead and apply it to that point. So let's go ahead and line that up just like a little bit lower, I think, just to make sure that we have that. There we go. And look where it's taking us to. Okay, so essentially it's telling us that we would continue capitulating to the 1 spot 618, one of the targets that we're already looking at, right? So, and it is absolutely relevant because in all reality, this is one bear flag, 2. This would be the third one since this is actually a failure. So this would be the third one here, and then one more. So let's just reference to the nearest iteration where that happened. Actually, there's one right here. So we have 1 bear flag, 2, 3, and now we have the 4th. Okay, so this fourth would be the larger capitulation, which would essentially take us down to around these areas here, right? So then we started consolidating, and then we started the massive lift, right? So this is essentially what I'm looking for. It is playing the typical rules of these what a lot of people tend to call ladder attacks, but they're bear flags, right? So they're liquidity traps. So I just wanted to be abundantly clear that I am still seeing the downside for AMC for a continuation of reaccumulation. And it's actually a very good thing, because then it'll validate this massive channel that we're riding on in the 5-day, right? So let's just go ahead and take a look back and now see that overall target, right? So now that target kind of changes to about $135 from the 190 that we were looking at, right? It's just that this is too far away for us to kind of look at right now, right? So I think we were even looking at these targets back when we were like over here, right? I mean, I'm talking about 2021 November. So these targets are not that new. They've been around. We've been looking at them. I'm just trying to say that now that we have more data and we have more price action, we can validate a little further. And even still, we were saying that I remember the influencers. They were saying, no, it's just, this is like a couple years away, easy, and not a lot of people believe them. A lot of trash talking on those influencers. But yeah, so I mean, if in any explosive, psychological event, yes, we can make that upside, but for now I would really like for us to focus on the shorter term probabilities, right? So that we make sure that we don't lose our butts within these drops. So as soon as this thing starts making the upside, then the swings are going to start being a lot greater, and it's going to be real chop. I mean, super, super chop, okay? So it's going to play with emotions. People are going to want to bail out, but it's just we need to practice patience with this and make sure to keep an eye on this, or how the younger people say, we need to finesse it, right? So we'll continue doing that, and we'll continue looking at it, and then we'll make conscious decisions as we go, okay? You guys, please know I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever, okay? Please do your own due diligence, and everything will be just fine, okay? You guys, please refer to the links in the description below if you are interested in acquiring, the TradingView software, so you can actually make these drawings alongside me when we cover these tickers every night. Okay, you guys, it would help my trading future out if you did click on my affiliate link. But with that said, you guys, I wish you well, a very good night, and I will catch you at the bell on Monday. Adios.